Hey everyone, it's Evan here from the Trade Risk on Friday, April 27th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So format a little bit different this week. We're not doing the full camera and long intro version for this week's recap video. I am traveling, so keeping things a little bit lighter, a little bit shorter, ideally, just so I can get out of here and enjoy the beautiful weather right now. So apologies as well if the sound quality is off, a little bit of an echo or anything else. We'll be back to sort of the usual, the usual format and quality next week when I return back to the office. But I decided the show must go on and that we must get a video out here, at least a brief one, to discuss this week's action. So without any further, let's jump into the action here this week. We're looking at a S&P 500 chart. This is a weekly time frame. We're looking at the cash market, and take a look here at the close of this week. We finished dead flat for a volatile, or a week that had some good range to it. Ended up closing exactly flat on the week, and if we zoom in here, take a look at the tail at the bottom end of this weekly candle. It's the exact inverse of last week's trading, and when we look at just these past 2 weeks here, I think that really sums up the market very nicely right now, is that there is a tremendous amount of indecision, tremendous amount of chop, and overall it is just a market that is trendless and consolidating. That really, I think, speaks to the state of the market right now. Last week we had this nice rally up at the first half of the week, and then we gave it back into the close, and we had this big tail on top, and we said, coming into now this week, we would need to see if sellers can get that follow through to the downside, show some commitment here in the market, and see if we can get some momentum going to the downside. Well, we did get that. We started off the week, especially Tuesday, kind of accelerating lower here, coming all the way down towards the bottom end of this big long-term channel, rising channel that comes in right around 2600, 2615 or so. And that was it though, right? We only saw up till about Tuesday. Wednesday we stabilized, and then we got this ramp back higher into the end of the week. It's essentially like the magnet, the market's got a magnet here at this 2670 level. These were 2670 was more or less the highs for the last week of March, and then the first and second week of April. You can see the highs all around this 2670 level. We closed there last week, and we closed here this week. So there is a nice balance point in play here at this 2670 level. Market's finding comfort trading around that value range. So we'll need to see, we're still waiting for a thrust away, a more convincing thrust away from this 2670 level to either break the pattern of lower highs in place, so in other words, an upside breakout, or we're waiting for a rollover and a breakdown of the higher lows that are in place. And you can really look at, say, 2610, 2600 to 2610 on the downside for that breakdown, and on the upside, you probably want a little more than 2720 to get above last week's highs. You'd probably want something more above even 2640 or so with some volume, with some commitment. I think that would give you some, some confidence that this pattern is breaking out, but or at least morphing. But for now, this is the range that we're in play. No technical change from an intermediate to long-term basis here. The market really just continues to chop around and consolidate. So when we go down to the daily chart, I don't have a whole lot more to add here. We'll go to the SPY ETF now. And you can see it's just, it's the same thing, of course. We're just looking at the SPY now, but you get the series of lower highs, you get the series of higher lows, and it's this 266 level in the SPY, where if you've been watching these videos for a number of weeks now, you've heard me talk about this level, and we're still just grappling with it and trading right around it. So for me, again, here's the SPY levels above 270.50. I mean, that's the pivot from last week's highs, and then I would say, at least from a short-term basis, below the pivot low from this week, which would be Wednesday, right around 261. So it's about a 10-point range. We're right in the middle of it, and we want to pay attention to see when and if the market starts to either break down from 261 or up above 271 to start to get a slight character change here. Otherwise, we're essentially in this big chop box here, and it's been choppy. Hopefully you guys have been surviving and getting through it, not getting chopped up too much. I know I've been getting chopped up plenty this month. This has not been a fantastic trading month by any means for my style of swing trading. So it's tough out there, and the best case is to either trade less, lower your position size, and just try not to be as active when the market is giving a lot of sort of false signals and failing at these extremes. So that's the S&P 500, and the other major markets really are in the same boat here. The IWM actually did close down about 0.5% today, starting to get maybe a little bit weaker here towards the end of the week. It's been the leader here. We've been talking about the IWM has been best in class, kind of holding up. If we look at the weekly chart, it's still above an 8 and 20 period, which are rising and bullishly aligned moving average here. So I'm not going to I'm not going to get too critical of this, but it didn't see as much of a bounce here. And again, being very critical towards the end of the week, kind of just lackluster, kind of hanging out at this 155 level. So it'll be interesting. It kind of had some too high volume selling days here, Tuesday and Wednesday this week. So be interesting to see if the IWM does start to roll over here. This was the leader for the market, or it was best in class in terms of the major indices. If we start to lose that in the Russell 2000, that would not really, unless we saw some big pickup by the Nasdaq or the Dow or something, that would not bode too well going forward. Not going to make a big deal out of it though. It's really, again, just consolidating, and if it can start to lift above 156 and start to break back out, suddenly it can look very good, as it's only a few percent away from these all-time highs. So let's keep this in perspective. If it starts to roll over and lose this level, then of course, again, not ideal. So Russell 2000 finished slightly lower on the week, and the Nasdaq almost flat, but slightly lower here on the week as well. Nasdaq, we did see a number of the big companies here report earnings this week, most of them reporting some pretty strong numbers, and some of them getting the sort of reaction that you would expect, further advancement higher in price. Others, not so much. We saw some muted reactions to earnings that, may suggest that some things are priced in here, or if the market, is failing to rally on good news, that is something we should be aware of and noting. I don't think it's a super strong argument in that case, because there has been, there's definitely been some rallies on some good numbers here, but we've seen some mixed cases. So all in all, again, I think to sum it all up, consolidating market, mixed signals. Do less if you're active, and if you're a longer term participant, then chances are, you're just watching those bigger levels and probably not doing a whole lot anyway. So that's the market environment. Let's get to some other major markets here. TLT did see a recovery this week, got a nice hammer going off of this 117 level. This was the more or less the lows here from 2018 in February, and we just about got down there and tagged them and reversed off of them and actually closed positive here in TLT. So a little bit of a oversold snapback here. Maybe buyers get something more going than just a snapback rally. Maybe this is a range here that we now carve out from 117 all the way up to 122 or so. Time will tell right now, but right now it is a counter trend rally on multiple time frames. Next up, let's go to gold. So gold here finished with a slight uptick, but still a fairly poor performance on the week, down almost 1%. You can see falling back down towards the lower end of this range here. Much like the stock market, gold is just consolidating here in this range from about 124.50 all the way up to 128.50. We've been talking about this sort of relentlessly here for the better part of the past 2 months or so, 2-3 months, as it's been consolidating. So still just waiting for for one of these extremes to be taken out, either a sharp breakdown or a breakout of this range. Otherwise, in between, got to be careful not to get chopped up. Want to play on those edges. And silver, very much getting hit down today, or this week, I should say, 3.5% to the downside after a almost 3% rally last week. So we just gave everything back and more. A nice big kind of fake out last week on some heavy volume. So fairly disappointing action for silver bulls here. Back into this range, back into kind of a do not touch or certainly do not get chopped up area. And again, just like gold, below 1530, back above 16 or so, that is the bigger target or the bigger range resolve that we will want to be paying attention to. Taking it over to further into commodities, we got oil finished flat on the week, down 2 pennies here in the USO. The highs from last week held, and we really didn't make too much progress to the downside. We really are just moving sideways here in USO. So again, another market that is simply consolidating. This pattern not as big as certainly some of the other markets. We've seen a nice uptrend for oil, but now in the short term we have this pattern here. So perhaps another continuation pattern that will continue this oil bull trend to the upside, or maybe this is starting to reverse things and we're going to break down from it. Time will tell here, but you have a pretty good, well-defined range. So next up, natural gas here had a nice thing going earlier in this week, but unfortunately sold off here into the end of the week. You can see it did finish slightly positive here and was really starting to muster up a better looking breakout. We did get long some natural gas on Tuesday, I believe. Yes, almost positive it was Tuesday. Still have that position on. Again, we talked about the UNG ETF here. We are starting to see an actual breakout. If you're looking at, say, the spot kind of futures market for natural gas, we are starting to get, it's around that 278 to 280 level in natural gas. And I think with the close here on Friday, we closed right around 277, given the sell-off that we saw here at the end of the week. So we're just kind of flirting and back to that bigger breakout level for natural gas. Obviously not a good finish to the week here, but we'll have to see what happens early next week. We've seen some good volume coming in here to the upside. Got a pullback this week. Let's see if the sellers get some follow through. If they do get some follow through early next week, I will likely be out of my position on further weakness, but for now, hanging in there to see what Monday brings. So that I think covers everything for the major markets. Let's look at sectors now. So if we looked at sectors here, we'll sort the sectors by their weekly performance, and number one spot goes to utilities this week, up up 2.74% or 2.8% here on the week. We took out last week's highs. This channel here continues to rise, and we're starting to accelerate above it. Slight uptick in volume here this week as well on this move to the upside. So some good action, some encouraging action here for XLU. It's been beaten up pretty badly over the past 5 or so months, but it certainly has stabilized and has been chugging along slow and steady to the upside here. So XLU bulls getting the job done. Number 2 spot is healthcare. So again, a sort of defensive theme to the market this week, but healthcare had just close to a 2% return this week. Again, it's been beaten up over the past several months now, and this pattern that we look at now on the daily chart for XLV is not really that attractive. It is, again, starting to take out the highs from last week. That's a big difference from, say, the S&P 500, right, where we had that big kind of, just compare sort of the weekly action here on versus the S&P 500, where we had that big tail last week. And now this week, we did have this big kind of follow through lower to start off the week, but now take a look, we're closing above last week's highs. So a much stronger snapback. Again, the 820 period moving average, the weekly chart here still has a series of lower highs. So it's tough to get super excited, but it is convincing and notable that it did see a much fiercer kind of snapback this week. And number 3 was discretionary ETF, XLY. Probably thank Amazon for lots of this move here towards the end of the week. Take a look at the daily chart, though. I think this is pretty interesting. Look where we got the gap up right into, if you were to project this trend line from the January highs down in this series of lower highs here, we failed right into this 105 level. So if you're a real sort of actionable, acute sort of short-term trader, or even I guess a swing trader taking advantage of this potentially for a short opportunity here, something to think about. It did, again, you're battling because it was in the top 3 sort of relative performers for this week's performance, but it is hitting some short-term resistance and coming into this prior supply here. So be interesting to see if this trend line does hold, and we do see a rollover here in XLY going forward. But for now, outperforming on the week. Let's see how this 105 acts. If we start to break above 105, then maybe you're starting to break out from this series of lower highs that we have in place since January. So that was the top 3. Let's take a look at the bottom 3 financials. Were the 3rd worst performing this week, down 65 basis points. So really not a whole lot of damage here, but just take a look at the indecision and sideways movement. Just such a stale market here in financials, and a little bit troublesome, or it looks a little concerning here. Again, it can be repaired. We can start to see some life come in here, but when you take a look at this action of this kind of impulse leg down here from $30 down to say 26 and change, so you saw this nice move lower, and now you're just kind of getting this very lethargic, you had this small kind of rally up, and then just this lethargic kind of consolidation in the bottom 30% of this impulse leg down, 35%. So XLF, vulnerable if it starts to break down. Hasn't happened yet. I'm not saying it has to happen, but if we start to get a move below this 2740 level or so, and we start taking down these highs or these lows right in here from the past couple of weeks, that could get ugly pretty quick. So XLF, interesting there, not doing a whole lot. It could come alive. It could get that upside surprise, so we'll have to keep it on watch. The pattern's pretty tight. XLB down 2% this week, so certainly in the bottom performing sectors here. You can see just kind of failing at, this is a weekly chart, at some of these 8 and 20 period moving averages here. Slight uptick in volume, did get a rally off the lows, but still not the prettiest performance this week, and this thing just looks like a mess. So it's really just in a do not touch mode, seeing just a wide range and just lots of volatile action here. So materials deservingly so in the bottom quadrant there for performance. And then finally, XLI down 3.2%. Look how tight this is getting here over the past 4 days, just hanging out at lows. I mean, this is a pattern that looks weak. Again, it could upside surprise. We could see, a rotation into this group, but this looks pretty vulnerable. And if we start taking out this cluster of tight lows here, right around 72.50 or so, there's no reason, to not believe that there would be a pretty fierce kind of washout and set of stop losses and momentum traders kind of taking out these cluster of lows around 72.50 or so. So, vulnerable next week. See if that can change. Otherwise, in the bottom performers for this week's sectors. So that is all I have for this week. Hopefully you guys managed through the range and through the chop this week and have come out the other side. If you did, then you are stronger for surviving and doing so. So congratulations to you. Thank you so much, as always, for watching. And like I say, Tuesday, be back in action, back in the saddle with our usual midweek video. So thanks so much, and talk to you Tuesday.